Well, Gulf Oil will remain in focus because the company had announced its first ever buyback. Now, this record date for this buyback is Feb 21st, which means that the last day to buy shares to be eligible to participate in this buyback would be Feb 17th, that is today. Now, the buyback size is nearly 85 crore rupees, and the company will be buying back shares at around 600 rupees per share, which is at a premium of nearly 17% compared to yesterday's closing price. Now, the company intends to buy back nearly 14.2 lakh shares, and nearly 15% of this, that is 2.12 lakh, is reserved for retail shareholders. Now, what investors need to do to gain out of this? Firstly, they need to buy shares worth less than 2 lakh rupees, that is close to 388 shares, to be eligible to be called as a retail shareholders. Then they'll have to tender all these shares for buyback. But do remember, there are nearly 58,441 retail shareholders in the company, who own nearly 55 lakh shares in the company, and the portion reserved for retail shareholders is only 2.12 lakh. Now, the gains for retail shareholders would all depend on the acceptance ratio. If more shares are tendered for buyback, then the acceptance ratio would come down, and lower the acceptance ratio means lower the gains. Now, on an investment of 2 lakh rupees, if the acceptance ratio is at 100%, then the maximum gains for a retail shareholder would be close to 33,000 rupees, that is close to 16.5%. And if the acceptance ratio falls to nearly 50%, then the gains would come down to 8.3%. At 25% acceptance ratio, the gains would be nearly 4.1%, and if the acceptance ratio is lower at around 10%, then the gains would be only 1.7% for a retail shareholders. Also, these gains would be tax free in the hands of the retail shareholders.